All right, let's get to the news. Because it's the calm before the storm. Tonight, NVIDIA's earnings is seriously going to impact the stock market. Peter Thiel's hedge fund dumped NVIDIA shares just before its big earnings report. I think this all comes down to the quiet story that's been unraveling in Japan. No one's paying attention to it, but Bank of America sees strong medium-term gains. Warren Buffett quietly building his Japanese stock positions. We're going to dive into that in this video. But first and foremost, after last night, NVIDIA closed at 181.3. I think tonight would be the actual storm that will happen. Whether that be going up, okay? If NVIDIA, both sales and earnings beat market expectations, especially Q1 performance, I think around 70% in both sales and earnings, but Q2 came out a bit soft on the earnings side, but still strong on the sales side, bit of divergence there. Now, we don't want to see both numbers dropping. We don't even want to see the same numbers as Q2, where sales are strong, but earnings are weak. We want tonight both earnings and sales very, very strong. Everyone around the world is uncertain. I think they're scared. It's very risk-off mode right now in the market. The bonds are rallying. Stocks are tanking. Crypto is tanking, especially with the news of Microsoft and Amazon downgrading their rating. Because principally, if you look at the NASDAQ, in the context of price, we are overvalued. And you reinforce this with what analysts are thinking around the world. You look at the Citi Revision Index. In case you haven't known, if you don't know what this chart is, this is a very useful chart because analysts around the world speaks about, are they optimistic about the outlook for corporate earnings and vice versa. If the index is above the zero axis, then they're optimistic about corporate earnings. It means, yes, we're not really in a bubble. Their earnings are very, very, very strong, which justifies their stock prices being high. But right now we're seeing, all of these big stocks are in all-time high territory. But recently in Q2, their earnings numbers are not as strong as their Q1, suggesting that they're not earning as much now. The demand is kind of slowing down, even though it's still the number one product on the market. But still, investors, they only care about earnings. They only care about earnings and how that would justify stock prices. And based on the Citi Revision Index, we're declining. Not just in the US. Okay, US currently right now, as of November 14th data, US is at 0.16. You can see this blue line right here. It's been declining ever so slightly. But the big ones that have been declining are the one in the UK. Look at UK. UK right now, below zero. It's at negative 0.14. Okay, Japan is at the highest. It's at 0.35, holding pretty strong. Therefore, I'm talking about the narrative, okay? I'm talking about the narrative of the story no one is talking about on CT. Japan, what's going on in Japan? You need to pay attention to Japan. Japan's government bond yield surged to highest in years, signaling a regime change. If the media is already talking about their personal opinion, okay, this is an opinion piece, they're already giving you the sign. Okay, because the chronological order goes like this. The news media would just publish press releases. These past few weeks, we've been seeing press releases from Bank of Japan governors are being very hawkish. They want to raise interest rates, right? But now, it's not just press releases anymore. They're giving out their opinion pieces. And if you're not caught onto this, you must pay attention. What's going on? The rise in Japanese bond yields increase fiscal strain for Japan, tightens funding conditions for banks and insurers, and signals that global investors may reassess the yen carry trade. More broadly, the move reflects shifting global yield dynamics that could ripple into U.S. treasuries and other major bond markets. Boys, if bond markets come up in the headlines, come up in the title, you have to take it seriously. If there's going to be a drastic change with the bonds, then it's going to be very scary, especially so for risk-on assets. Speaking of bonds, Japanese bonds first, the 10-year yield. Look, this is way too high already. It's at 1.772%. With the interest rates that Japan is at right now at 0.5%, they cannot sustain this high amount of yield to pay back to bond investors. They're going to have to increase it, make yen more expensive. The most dramatic one, and the one that everyone remembers, is the one that happened in August 2024. because it's been a very long time for Japan. Suddenly they raise the interest rates, right? A lot of carry traders will have to unwind their positions. They're gonna have to de-leverage their risks. Very scary times, ladies and gentlemen. Okay? The Japanese yen, this is the daily time frame. I've just been bleeding out nonstop. It's been taking a nosedive to the downside. This is the Japanese yen futures. What does this mean? Okay? It means they've got themselves a bit of problem with inflation and wage growth is going up. The story, the narrative being presented here, keyword regime shift. Okay? This is gonna change how money is going to be seen in the future, especially for the Japanese yen. This is a massive problem that is unfolding in front of us. Okay, here's another problem for you. Look at USD JPY. Right? Now it's climbing at 155.5 USD JPY. What does this mean? It means this forces Japanese investors to start buying dollars and then offload those dollars into the yen to increase the value of the yen, to increase the value of yen against the US dollar, because it hurts Japan in terms of trade. So if you've got inflation coming into play and you've got the talks of wage growth going up, you don't really want to disrupt the economy. And any way that you do disrupt your economy is if you allow the dollar to keep on succeeding against the yen. That means it's forcing them to use more yen just to make purchases. They can't do that. So they need to buy. What the Japanese need to do is they're going to need to buy a lot of US dollars and then bring the dollar down. But the problem is, macroeconomically speaking, if you bring the dollar down, then logic says that everything should be going up because Bitcoin is against the US dollar. What is Bitcoin doing now? It's not. Okay? That's the issue we got, because the problem now boils down to the interest rates. Money is still expensive now. That's why you need to pay attention to news. If all of the interest rates of all central banks around the world are at 0.25%, when was the last time that happened? 2021, right? Interest rates were at 0.25%. You don't really need to care much about fundamentals. You can purely rely on 100% technical analysis because money is cheap. Technical analysis on the high time frame is much more respected because money is cheap. Okay, but now money is expensive, and if you're doing technical analysis and you're wondering why you keep getting stopped out, is because market conditions change every single minute, especially so for Bitcoin. That is so true. Yeah, basically the game for cheap money is kind of done now. Global investors, when they borrow money, it tends to be from Japan because it's so cheap. But now, if it raises and the prospects of the Feds holding off on cutting rates, then in principle, it's going to be expensive to borrow money in general. Their options would be limited when it comes to borrowing money. If everywhere around the world is starting to become more expensive to borrow money. Until we get a 2% goal for interest rates in the US and in the UK, it's still expensive money. We're at 4% now. It's halfway to go. And how long will it take? The forecast shows the talks of 3% would be in April. 4 months. Do you have 4 months to wait out your position? Leverage trading BTC. You're going to be eaten alive in funding fees, guys. Even if you're going to add more margin to keep yourself from getting liquidated, your funding fees are going to eat you up. So it's all about time, and it's all about borrowing cost. That's the most key takeaway that you must understand. Let's see how the market goes. It's kind of scary, actually. So it's kind of sus because why are we pumping right now why are we slowly grinding up? Is it to grind up and then, when the news come, boom. I don't want to see that happening, but if it's going to happen, better happen fast. How many days we got left to? We got 4 days left for the week to close. And if we close this week bearish, it's signaling weak confidence for investors. And when I mean investors, I'm talking about the same people that are dumping through BlackRock. Okay, the clients of BlackRock. tonight is going to be volatile. I guarantee you. Whether that be going up or going down, it's going to be very, very volatile. Everyone is eyeing on this news. Take good care of yourselves. Like this video, and we'll check you guys out later. My name is Ron. Shana now.